Bam. Okay. So first of all, good morning. Thanks for joining. Basically, I'm going to go over my take on the market, some market analysis. I'll go over some of my current trades, and then I want to showcase the market Vickers trend cycle indicator that I'm going to provide access to when I launch Market Victor Pro. Um, and you know, I've had this Discord free for like over a year, and I share all my trades and stuff like that. Um, and I would do these live events like once a month, maybe. Like it wasn't consistent. And, I decided like I wanted to shift a little bit away from like a copying trade thing to more of like an educational so people can learn how to do it. Um, and especially like, you know, uh, I mean, of course, all of our time is valuable, right? So as I charge for the time I give and the access I give to tools I use for trading, with that comes more liability, right? So I have to shift to a more educational approach because I'm not a licensed advisor or anything like that. Although I could get one if I wanted to. Um, so I'm shifting to more like, hey, these are the tools I use when I trade, and every week I'm gonna do a live stream like this, and then we can all kind of like, hey, like, how are you using this indicator? Like, what kind of trades have you been taking? How are you using it? And we all kind of discuss and like learn together and improve our trading. So that kind of approach. I'm still gonna share my trades, because I believe in transparency. There's a lot of people who say they're good traders, but it's kind of hard. They're kind of shady, right? They show some trades, maybe not other trades, but I show every single trade. I'm very honest and very transparent with my style. I work full time. I have a wife. You know, the way I trade is not gonna like replace your job. I mean, if you have enough money, it could for sure. But most of us, I'm assuming, have a job, want to generate extra income with the savings we have in a very consistent manner that doesn't feel like you're stressing out. You can spend time with your family, and that's kind of what I do, and it's improved my life. And I see that missing. A lot of people I see want to make money really fast. And in my opinion, I think the casino is the best place for that. Uh, but I, you know, I believe the market is a game of survival, and it's a game of just making sure that you have a sustainable approach through all market cycles, right? Like I didn't have any losses here. I trade the same way. When the market dropped from tariffs, yeah, I broke even January, a little bit. Just I'll call it break even February too, but no loss. Like in fact, I got assigned on some position I'm still holding till now, like my Nvidia. So I never get like washed out. I didn't blow up my portfolio. Like I didn't change really almost anything. So that's kind of the type of community I'm trying to build, basically, people who are interested in that. So with that, a couple more people joined. So what's up? Thanks for joining. I'll go ahead and look at the SPY. And I always do SPY analysis because most stocks are going to follow the market, right? So I always start off with my favorite indicator, anchored VWAP. I always talk about it. I have posts about it. And specifically for the SPY index, I like using VWAP anchored to each quarter. The reason why you choose a quarter is because that's when the S&P balancing happens, right? It's a quarterly rebalancing. And so a lot of institutions, modify their positions, roll their positions, whatever they got to do to balance the S&P 500. And so that's like a good anchor point for analysis. And so October just started a new quarter, so this is still a kind of a new line, but you can already see it's like reactive, and you can see a lot better if I go to the 5-minute chart. You'll see a VWAP here. And this is such an awesome indicator because like trend lines are cool, like drawing them yourself, but there's a lot of like subjectiveness to it. Someone could draw a trend line just a little different than you, and it might not be accurate, but indicators like this, like VWAP and moving averages, it's automatically calculated. So everyone has the same line on their charts if they're using the indicator. So it has a better confluence, it has a more consistent reactivity to it. And you could see on the 5-minute chart, every time SPY gets down to this AVFQ, a battle happens and buyers remain in control. Same thing happened on Friday. Went down, buyers get in control. As long as this continues, as long as price stays above AVFQ, it's good to stay short term, bullish in the short term. That's pretty much how you read it. When price is above AVFQ, you stay bullish. Buyers are going to keep supporting this price action. Is going to keep buying and holding this line here. And this is free on TradingView. Most indicators I use are on TradingView. The only one that is not free is my custom one, obviously. So just so I can showcase a little bit, if I go to the previous quarter, which was July 1st, I mean, the market was so bullish it might not even show much, but you can see same thing. Holds here, holds here. Bears started to bring the market down, bulls kept it up. The one time we did kind of have a break below was this here on beginning of August, and that was, I remember it's like when that happened, it's okay, like this could be the start of a pullback. And then the very next day, buyers recovered it, they tested it, it held, and it continued, and it's been up ever since. So it's a very powerful indicator. It's very important for my trading and investing too. So that's kind of how I'm looking at the market. That's why I'm cautiously short-term the bullish. And only reason why I'm cautious is because of seasonality. So I'm going to go ahead and open up the seasonality chart that I have. I'll move this over here. Hopefully you guys can see it. And so basically, seasonality is just a measure of the average price movement of the market over a period of time. This is a 20-year range, so from 2004 until 2024. And it's well known that August, September, October are the most bearish months of the year, right? And what that means is doesn't mean it's always going to be bearish. It tends to be volatile. If a pullback were to happen, it most likely to happen within these 3 months. And I've seen that since I started investing in 2018. Like every year, some kind of pullback happens in these 3 months. And this is the first year where I have not seen that. And it's pretty crazy, to see that, which is why it's important, you don't follow these, seasonality is so strict, but it's always in the back of your head. It's okay, the chance of a pullback happening now is higher, so I'm going to adjust my trading to account for that, aka risk management, right? So I have been continuing to take bullish trades. I continue to hit my, trading targets, but I do it in a way where if the market pullback does happen, I'm not caught off guard. My current positions are ready for that, and I have cash set aside to take advantage of that too. So I'm not missing out. I'm not sitting on the sidelines completely. I'm still participating, but I'm just doing it in a way where I don't lose sleep at night. And I think that's really key. A lot of trading is very based off your emotions, right? So you need to be in a healthy headspace, a clear headspace, always feeling like you're in control of your money because you are. No one forces you to take trades. The market doesn't force anything. You press a button to buy and sell. So it's ultimate accountability. So basically we're in October. October tends to be where the market bottoms if we do get a pullback. Usually mid-October. And that is because that's when earnings season kicks off. Earnings season tends to kick off mid to late October, and usually around this time, companies report. We've been in a bull market for a very long time, and so companies tend to post good earnings, and it brings the market up. So we do have earnings starting in 2 weeks. After that earnings period, if we get a market keeps going up, I'm going to stop being as cautious because November and December are the strongest months of the year besides July. July over here, super strong. November, December, very strong as well. So, so yeah, that's kind of the seasonality of it. So just keep that in mind. We're still in October. A pullback I wouldn't be surprised if a pullback happened. I'd be more surprised if it didn't, kind of thing. And just to show you, I'll show you some historicals, right? This drop, this is a 10% pullback. Actually, a little bit more. Yeah, 10%. Started in July, just right before August. It lasted until end of October. This is a bear market, so it might not really count as much. So I'm going to ignore that one because we're in a downtrend. A pullback is more likely. Here is 2021. Like 2021, like the really only pullback we had was in September, right? September, bottoms in October. 2020 during the COVID, September, recovers in October, bottoms end of October, boom, all-time highs. COVID crash. Here we have beginning of August pullback, right? So right end of July, we get a pullback down. It lasts, volatility lasts until, yep, you guessed it, October, until the market recovers, So that's it's good. Like this is good and stuff to keep in the back of your head, So far this year we haven't really gotten anything. I mean, these pullbacks are nothing. Very, very nothing, what, 2%? So anyways, if the market does pull back, how far could it pull back? Moving averages help a lot for that. So first, of course, the first thing you want to see is AVFQ breaking. After that, next support would be the 20 SMA. That's what I use. 20 SMA seems to be a pretty accurate level of support, whether it's in a downtrend or uptrend, As you could see, it tends to react there before it goes down to the next support level, which would be the 50-day moving average, right? Which is about 650 right now. So I think just those two, if we pull back, would be a 3.6. So a 5 to 10% pullback, we could even get all the way down back to 600. I don't know. I don't think that's likely, but it could. But I think the lowest it could probably go would be to probably retest all-time highs. But I guess the point is it could be a 5 to 10% pullback. So don't be surprised if that happens. I'm going to check really quick in the chat for questions. You guys can type questions anytime you want, or if you want to speak, you can also just let me know. Okay, no questions so far, so I'm going to continue. Economic reports. I don't think we have anything. This was this week. We literally have nothing. So usually when we don't have any economic reports, you assume the current trend continues. So we're in this floating higher trend. So therefore, we're going to continue floating higher. Obviously, unless something unexpected happens, unexpected news, but you can't always assume such a low probability case. So I'm as of now, based off the fundamentals too, aka the economic reports, I'm expecting the market to continue this kind of grinding higher pattern. And lastly, I'll go over for the SPY these two indicators that I use a lot, also free on TradingView. Heikin Ashi candles, very, very good. Heikin Ashi candle is just a different way to calculate candlesticks, and it has a smoothing effect to it. So it's really good for determining trend and trend changes, And I have an article on it in Discord, so you can read it. It's very good, and it's detailed, but not too detailed, So it's good. But basically, Heikin Ashi, when it's a very bullish trend, you'll have flat bottom candles. You see, there's no wick on the bottom of these green candles. That's okay, no matter what, this is going to be a bullish trend. So even though on the normal candlesticks, you see a red candle, according to the Heikin Ashi, these are still bullish movements. until you get dojis. Dojis usually, or doji, I don't know, usually signify potential trend change, right? So doji followed by a bearish candle, which are flat tops. And, we haven't really seen flat tops in a while, but back like in February, you can see, you know, consistency here. So if I go in the normal candlesticks, you might see this green candle and be like, oh, is this the bottom? Well, according to Heikin Ashi, nope, still part of the bearish trend. And it continues until you get doji with the opposite candlestick, right? So according to Heikin Ashi, this is a strong bullish trend. According to VFQ, we're still in a short-term bullish trend. The last one I like to look at is called Money Flow Index. And this one is from, I can share it, I think. I can share it in the chat. But yeah, I'm not gonna look through this right now. But yeah, it's free. I found it because I'm a nerd and I love scrolling through just indicators. Like this is like what I do in my pastime. And so what I like about this was the thing I really liked about it, first of all, was it's such a good measure of market bottoms. When MFI hits the bottom of the range here and pops back up, it forms this kind of green highlight. And like it's been so good and consistent. It marked the 2024 August bottom. It even marked this year's bottom on April 8th. Like that's crazy. It's free. Like that's so cool. Um, Same thing here in May 2024. It didn't even mark this like first bottom, like it marked the actual like, right before this rally. But what it also does is it also marks potential tops. And I will say, in my experience, calling out market tops is like way more inconsistent than market bottoms, which makes sense, right? Because in the long run, America's economy is growing. Right, so there's always going to be more buyers than sellers in the long run. So people are always looking to buy stocks when it drops, not sell, for the most part. So it's less consistent, but still it gives you like a heads up, like, oh, okay, we might see a pullback. And in this case, we did in 2024. We might see a pullback in September 2024 again. We kind of saw a small one. Okay, this pullback happened without anything showing. We got this, these readings here. Okay, we might see a pullback, and we did. You know, it's not always accurate, of course. We had this huge reading here as the market was recovering from tariffs, and we didn't really get anything. And since then, we haven't, believe it or not, since then we haven't gotten no extremity to the upside, which is crazy because it feels like this market's overreached, But according to technicals, it's not showing that. So according to MFI, no indication of a pullback coming. The only indication of a pullback coming is basically seasonality. I got a couple questions. So, do you have any idea or theories on why we did not see the seasonal pullback this year? That's a good question. Theories? I don't know, man. I guess like on a mathematical perspective, all like nothing in the market is like guaranteed 0% or 100% chance. It's always like, 85% chance. So this just could be one of those years where like, seasonality is like I don't know, let's just say 65% thing. So, that means 35% of the time it's not going to be happening. So we could just be in one of those cases. Besides that, I mean, the AI tech companies, like I'm not talking the small ones, like the big ones like Nvidia and like Google and Microsoft, like they're growing earnings like crazy. Like Broadcom's growing like crazy. Even AMD. That could be propping the market up, which is also interesting because like if you look at the market, I believe the S&P index is like 33% of the weighting is like the top 10 companies, I think, or something like that, like the Mag 7, which is crazy. Which means like every other sector is doing shit. Like if you look at healthcare, it's doing bad. If you look at trucking, it's doing bad. If you look at consumers, besides wholesalers like Costco and Walmart, they're doing bad. It's like only tech is doing good, and it's like it does kind of reflect how we've been feeling, right? Everything around us feels more expensive. It feels like a tighter economy. yet the market's going up and housing's going up. And I think that's just because like we're not seeing AI. Like these are top level technology that we're not seeing around us, you know? So so anyways, that's kind of what my where my head's at. Next question. What are your thoughts on the skew data used for Fed reports and their impact on the market? Do you think their impact is weakening? I think so by skew data, I'm assuming like when they release like job reports and then they like come out later and like do their like revisions. I think they always do that. You know, like this isn't anything new. Like they always revise their data like since whenever they started doing this, maybe in the 80s or 70s, I don't know, a long time ago. Um, but yes, like in general, the economic impacts are weakening. Like the market does not care at all whether the market's gonna, I mean, whether the report comes out weak or not. Yeah, so I do think their impact is weakening. And actually it goes back to the first question too. I think it's because of the rate cuts, you know. Uh, I think the market was pricing in 2 rate cuts this year, and then Powell confirmed in the last meeting they were going to do 3. So I think that extra rate cut really propped it. So think about it this way. Institutions, they calculate their valuations of the companies projected based off current economic conditions and their and companies' earnings, right? So if they priced in 2 rate cuts, they have a certain number that they believe in 5 years where the companies how much money like they could be making. But now you add in a third unexpected rate cut that brings their interest expense lower, which means that the projections for in 5 years will be higher. So I think that could be the ultimate reason why we're seeing no pullback. I think that extra rate cut is um is like really bullish. So, do you think a sector change to healthcare is coming? Sector change. Um, I th so I th the way I'm taking that question is like, do you think healthcare is gonna like recover? Um, and I mean definitely, you know, healthcare is a undervalued. Yeah, undervalued for sure. Like healthcare, we're always gonna need healthcare. Um, you know, every industry goes through their bearish cycles and bullish cycles. You know, healthcare has been so strong for a long time. Like if I go to UNH is kind of cheating because that company is way too good. But maybe I'll go to um like I don't know. Let me see. Johnson and Johnson. Go on the weekly chart. That is like extremely strong, you know. I mean, not even over here, it's like it's weak but still doing good. What's a good example? I guess UNH because it's just so clear, right? Like basically since 2008, healthcare has just been up. So everything goes into cycles. Yes, healthcare in general is undervalued for sure. Um, I specifically put the ones I think are good in the valuation database and good based off my metrics like different fundamental ratios. So Johnson Johnson, one of them, UNH, is one of them. It's not in there because I also like don't like investing in insurance companies for like ethical reasons. But it is obviously like Warren Buffett bought it. Do I have to say more? You know, um, like Novo for sure is undervalued. I like this one a lot. There's such a consistent revenue stream and growth for free cash flow. It's like really crazy. Yeah, so Novo for sure is undervalued. I think in my valuation database, I have their valuation at around like 80 something dollars. So yeah, I guess for sure healthcare will come back. It's just a matter of time. Yeah, reports always revised the way they collect the data. Yeah, I know there's like skepticism around like Fed data, but like that's what institutions go off of too, you know? I mean, of course they have insider information, but like that's what they use for their determinations of the market. Like who are we to say? I mean, of course we have say in it, but I guess what I'm trying to say is like institutions make the market. You know, whatever we see and read and get news of, they've already have it. They probably have it before you and probably more details about it, you know? So like we're not going to see anything different than what institutions see, including the economic reports, you know? So That's why their markets react so strongly to them when they come out, because they're using that data too. If they weren't using that, if they didn't believe the data, you wouldn't see the market. It's kind of ironic, because we're not seeing the market react to it now. But like before this period of time, the market was reacting to it, right? Every time reports came out, unemployment came out, inflation reports came out, the market would react to it. So, you know, personally, like you can believe the numbers or not, that's no problem. But um, but yeah, that's to me what institutions go off of that. All right, it's almost 10:30, so those are all the questions so far. Yeah, ethical investing is a whole different ballgame, dude. Um, in your valuation database, you rank some tickers as bearish with A rating or overvalued with A rating. Are you implying buy? No, so in the valuation database, I pinned a post, um, valuation database. I pinned a post how to use it, and I kind of explained what each one means and how I personally like look what I look for during uptrends and downtrends. So, um, grade A just means like across, I have four or five, I think I have five valuation models that I run for each company that I track. So a grade A means across all five, I got like a very accurate rating. Like they're all similar numbers and they all come out to be similar values, which means to me like it's like a higher accuracy probability, right? A grade C means like of those five, like three matched. The other two were like outside of like the, what's the word? Like they're just out of like out of range, you know? So like, so a ticker with that's bearish, it means that it's a technical long-term downtrend, but it has an A rating, which means like the current valuation I have is consistent across these models, right? So like, so it kind of like just like depends on you. Like if you like want to really focus on like accurate valuations, you can filter through grade A only. Or if you only want to look at undervalued, you can click the tag for undervalued. So yeah, gotcha. Okay, cool. All right. Um, I'm gonna go over my current trades really quick, and then I want to show the. You know what? Actually, let me show you the market Victor indicator first, because I want to have some fun with that one. I didn't prepare anything for it because what I wanted to do is I wanted you guys to kind of just like call out stocks, and we can just hop on the chart and just check out the indicator and see like how it did. So as that's going, I'll show some of my stuff. So market Victor trend cycle. Basically, because I'm a nerd, I spent a lot of time looking at different indicators and learning what technical analysis like kind of means, And like everyone else, like I opened up Robinhood and the first indicators you see like RSI and MACD, right? And which is fine, like to each their own. I didn't find success with those. A lot of indicators I did not find success with. And then I started like learning, okay, like what is like an indicator? It's not like magic, Like what does it show? And through my experience, I learned that like the indicators are supposed to show you what institutions are doing. Like simply said, like you want to know where institutions are buying, where they want to sell, and you see that through the price action and some measurements of volume and price action combinations, right? Like the moving average is just the price of the stock in the last 50 days. So it makes sense that like when you see the moving average sloping down, like it means that average price is trending lower over time, right? So it's like, okay, that makes sense. It's like bearish, like in a way. Like I expect price to continue moving down until when? Until they curl back up again. When they curl back up, it means okay, the price over the last X number of days has been increasing. Or like VWAP. VWAP is like a moving average with volume. So some days we have high volume, some days we have low volume, and that's incorporated into the average cost. So so to me it's like, and then like you don't need too many fancy things either. Like price action itself is very valuable, right? So like you can just tell like support and resistance levels just by looking at it. So like for example, and that's why I love Wyckoff. and I have an article on Wyckoff too, and I trade that a lot when I can. But like just looking at these kind of levels here, you can see like multiple touches at price points. This is probably more powerful right here because they have multiple touches. This could tell you like, hey, these are levels where institutions want to buy here. So at the $47 range, and institutions are selling at 58. And so like when you zoom out and look at it, look how future price reacts to these previous levels, right? So this is just based off price action completely. You don't need volume profile or any of that. I mean, volume profile helps, right? If you're new to it, it can help you train your eye to catch the stuff, but eventually you won't need it. So the trend cycle indicator is like I coded through a series of different criteria that I look for to determine trend strength. And so I put them all together and coded it into an indicator. It's like a visual metric. And so when there's a green arrow, it just tells you like, hey, this is a bullish trend cycle. It's not gonna tell you how many days. It's not crystal ball, right? But it's just like, hey, like starting from this candle, you're in like a bullish trend strength. Like there's enough signals to show that the trend is gonna continue moving higher, and vice versa with the red arrow. The signal is like, hey, this trend is gonna be like bearish. Of course, it's not perfect. There's gonna be times like this where it signals in and drops, but the point, like the important thing is it gives you odds on your side, right? Like you want higher than 50% odds. And of course you want more than that, but like minimum to be profitable, you need your odds of success have to be more than 50%, right? So this indicator for sure gives that to you. It's like Novo. This is like one example. Um, calls out nice strength, trend strength here. False signal, kind of a good trend strength. Good trend strength. False signal, false. Good trend strength, false. And okay, and one thing also before earnings, ignore these, right? Always earnings is like it take in like technicals and throw them out because at that point you're no longer technicals won't matter. Like fundamentals kick in now. The company could say, "Hey, we increased our revenue projections for the next 2 years by like 12%." Like, whoa, okay, like price shoots up. Or they can come out and the price action could be bearish. They could be like in a downtrend like Novo, and then their earnings could be like so good it'll just pop up, right? So all your indicators showing that it's bearish is gone, and vice versa if it's like in a bullish trend, right? So always around earnings, I don't like to trade them. The only trades I like taking on earnings is like super like nerdy statistical ones. Like okay, like I think I did one on MU, and I use E-Trade. And what I like about E-Trade is like they have an earnings move analyzer, and it shows you like um, all past earnings moves and like averages them for you, like from like the beginning of the ticker. So for MU, I was like, okay, like the average implied move is like 10%. The largest drawdown it ever had was like 20%. So I said, okay, like where's the nearest support level? I was like, maybe this gap fill here, like a 150-ish. I think I sold the put at 150. And okay, so I'm below the historical average move. I'm below the largest historical move, and I'm at a support level. My odds of success on this trade is like super high. That's how I trade earnings usually, you know. That's just me. Everyone's different. Like I'm seeing like Arrakis, you made good money on MU. I mean, that's good. I know like we always wish to make more money, but dude, like that's good. Money is money. I've noticed that unless a company blows past expectations, the stock isn't climbing in price. Then we have companies with no profit and crazy day they take out. Yeah, I know, yeah. Yeah, it's like the the reports matter, but like guidance matters a lot too. And sometimes they might guide like, oh, like we project to make this much money instead of like this lower amount in the next year. And just based off that, stock price will go up because now they're expecting revenue to become better next year instead of now, you know. But I mean, that's what makes earnings so hard, you know. Um, so those green triangles, yeah, green triangles, red triangles are my custom coding. This is the market Victor trend cycle. This is what I'm gonna release access to with my new Discord. Um, so, so yeah, basically like okay, I'll just show you how to read it in a better way. So I'll show a real example with it, like Nvidia. Nvidia has shown a bullish trend cycle from April 14th and did not revert all the way until August 20th. So I didn't sell a single covered call. Maybe like I did a little bit here, but I stopped selling them because I did not want to be taken away. I have 100 shares in Nvidia that I got signed at 120, and like because this was showing bullish, I said my odds of me getting called away are higher, so I'm not going to sell calls until I see red. And then by the time I saw red, I was like, well, my shares are already up like from 120 to like 180. Like I'm just going to keep holding. Like Nvidia is continuing to be a strong company. It's like why would I sell calls and risk being called away? Like what I did on Google, you know? Ironic, right? So Google, I was selling like super like zero point 0.1 delta calls weekly. And because Google like is a very like choppy stock in a way, like it's very like boom, like it doesn't trend very well. It's just always chopping around. So I felt like selling calls is good. And then of course when I sell a call, it just gaps up big time. Now I'm stuck with a 225 call I'm rolling every week. But yeah, right? Like I don't follow my own rules perfectly, but this was in a bullish trend cycle, so I should have expected that this could have happened. So I'm kind of waiting for a bearish trend cycle to show up, but this could materialize or not. I'm not sure. Um, the swing signals I do, these are a huge part of it. One of my criteria on those is like the stock has to be on the daily chart. It has to have a bullish trend cycle, among other factors I look at too. But I will show you guys a new trading strategy I'm testing right now on the 30-minute chart. And these tend to be either day trades, and like day trading mean like 1 to 2 hour holds, or it could be an overnight hold too. Um, and what I use with it is another indicator called ATR bands or ATR stop loss finder, right? And these trend cycles. Um, and then I use ADX too. So ADX is average directional index, and basically, where's my ADX? Right there. Basically, the way I look at it, when the ADX is above 25, it's signaling a very strong directional trend strength. And so basically what I'm looking at is on the daily chart, I need to see a bullish trend cycle. Oops. Bullish trend cycle, and I need to see the ADX over 25. So on Google, starting from July 25th until September 30th, Google is a candidate for my trading strategy, right? Based off my trend cycle and based off ADX. And I go on a 30-minute chart, and between these two times, I'm okay. When we get a bullish signal, I take the trade. My stop loss is based off ATR. My profit target is also based off ATR. So if I add the profit target here, stop loss here, and I hold it until it hits. And it's been getting a really good consistency rate. I ignore the bearish ones. Why? Because on the daily chart, we're in a bullish trend cycle. So the longer term trend is bullish, right? So I want to ignore those. Again, we get another one here. So same thing. I go profit target, stop loss, and we hit it. So this is one way that can help you guys with your trading in my new Discord using this. I'm probably going to be trading these myself too, but I'm still paper trading them and making sure that's a consistent method. But looks promising. So that's another example of how you can use these ones. And the cool thing too is like they work on every time frame. I wouldn't go on weekly or monthly. There's too lagging, but daily chart for sure. I like them for option selling. Like for example, like if you want to trade more aggressive options like strikes, maybe you want like 0.3, 0.4 deltas. Seeing that we're in a bullish trend cycle might give you that confidence in your trading checklist. Like, okay, my checklist is XYZ plus market victory trend cycle. Okay, it's bullish, that increases my odds of success. So I could put a strike maybe at the most recent, you know, most recent low, or maybe at the low of the day, or whatever, and however you want to play it, knowing that there's a high likelihood that price will continue moving higher. So I haven't seen any much company call out. Yeah, so go ahead, like if you just call out some stocks, and we can go on the chart with this indicator. But someone mentioned ASTS. So if we go on ASTS, we've had a bullish trend cycle and signal since September 19th, and it hasn't gone away. So another way you could use it here is, okay, like this could be a bull flag pattern, right? So bull flagging, because of this indication, I believe there's a higher likelihood of a breakout happening, right? And that ended up being true. Stocks like Open, if you like trading more speculative stocks, Open, we had a bullish cycle from August 18th, and a bearish one didn't show up until September 30th. So all during this time, if you were worried like, oh, we're reaching all-time highs, like on Open, is this overextended or not? This could help you hold longer, right? Like Tesla. Tesla has been in a bullish cycle from August 8th. So what I like about these two is like there's not a lot of flip-flop. Like these signals tend to stick for the most part, Like this signal was from April 23rd until June 4th. We had a flip-flop here. And the flip-flops, how I read them too, is like if you see a lot of them in a row, it means that the stock is choppy, right? And so it's really hard to trade choppy stocks. It's obviously a lot of trading strategies and indicators work when the stock is trending, right? And so seeing that there's no flip-flop of a signal here from all of August and all of September and all of and half of September, sorry. Seeing this breakout, being like, okay, like this could stick, based off this indicator. I hope that makes sense. There's like so many ways like that you could use this. I hope I'm not sounding like too much or confusing, but I like look forward to like you guys like basically using this indicator and making your own strategies. I think that's gonna be so cool. Like every week we get together and be like, hey, like I went on this and I'm finding this strategy and like I've been testing it for 2 months and like it's becoming profitable. Like, and we share it, and like now everyone has another like checklist they could use for their trading. So like I showed you guys like the 30-minute one. That's something I've been looking at, and paper trading. Um, and so I'm like, yeah, sorry, I'm getting excited, but I'm looking forward to that for sure. Um, let's see. I got burned by CC on ASTS last week. I hope by burned you only mean that you got called away and lost out on more profit. I hope that doesn't mean like that you. Okay, good. Hey, that's okay, man. Like, I guess the cool thing about covered calls is like your worst case scenario technically is profit, right? It's always like, oh, I could have made more. Like on Google for me personally, like if I let myself get called away at 225, I'm missing out on $20 a share profit. So like I can't complain, right? I'm still making money, but it still kind of hurts. So I totally get it. Um, no other questions. So I guess what I'll do is I'll go through my current trades and then I'll keep this indicator on so you can kind of see my logic behind them. I already went over NVIDIA, and you know what? Let me pull up my other chart. I already have everything marked on there. This might look messy. Let me clean it up. Uh, I'll just keep the. Oh, one more thing I want to go over. AVWAP-E. So the same concept, right? On the SPY index, we use AVWAP-Q. You can use the same concept and anchor it to the earnings for individual stocks. It acts this very similar way when price is trading above it. And, buyers in control. It's more bullish in the short term. When it's trading below, it's bearish, etc. So AVWAP, I'll keep AVWAP-E on my trades too, you guys can see. So my most recent assignment was AMD. When we got this, so first thing was I saw this bullish trend cycle on September 22nd, and I said, okay, like if AMD can break above AVWAP-E and the 50-day moving average, which I have here, which is the blue line, like I will trade it more aggressively, because semiconductors are very strong, and I can easily see AMD continuing to break above this swing high here and challenge all-time highs. And which I have an article on too on how to identify long-term trends. The 50-day and the 150-day moving average are showing a long-term uptrend, right? So I have a long-term uptrend behind me. I have a bullish breakout above EVWAP-E and 50 SMA, which kind of like closed below it slightly, but like that's okay. Um, and the reason why it's okay is because if I go onto the 30-minute chart, I see that this level here provided resistance for AMD. Like price stopped the downtrend at this price point and started trading sideways between these two ranges, and it broke above it and kind of held it. So even though we're kind of slightly below the 50 SMA and AVWAP-E on AMD, I was comfortable getting assigned because it's still like right there. And we gap filled and we held above this breakout level here. But, so plus we have a bullish trend cycle indicator. It just gives me more confidence, like, okay, if I hold it, it's going to continue higher. HIMS, I've been trading a lot. I have 2 covered calls at 59. I've been basically rolling these every week. And HIMS is so easy to roll because it's such a volatile stock with high premiums that you can easily roll like 2 strikes like per week. So I think I sold the first call like at 52 or something. I've just been rolling every week up to 59. I'm rolling them because I think HIMS is in a big fat Wyckoff range. Damn, I have too many lines on here, but these white lines, to me, this looks like a accumulation range potentially. Price high limit is about 66, low limit is about 41, and we've been seeing price hit down, hit up, hit down. So I think we're going to keep trading between these ranges here. So I want to hold my shares in case we head back up to 66 and break out above. Just like VEEV. VEEV is another trade. It's purely Wyckoff based. So with VEEV, same thing. We broke above from earnings. We've been trading sideways here. Top of the range, kind of 2 bottom ranges here. So price trades between them. False breakout, recovery, very bullish. I initiated a long position in here as it was holding and testing this bottom range. And I completed my position on this breakout of AVWAP-E and the bullish trend cycle indicator. When I saw that, I said, okay, I'm going to finish my swing position, expecting price for sure to hit this top of the range target and potentially break out. and break out because according to the Wyckoff trading method, false breakdown before is a really strong indication of a breakout coming next, and that's exactly what we saw. So when I saw the breakout and the test at the top of the range, I added more to my position, expecting us to continue trending higher on VEEV, possibly back to all-time highs at around 343. But again, like having this indicator helped me with that confidence. You know, like, okay, this showed up, higher likelihood of a breakout happening, and it did. Um, Uber, I've been holding same thing, Wyckoff trade. So top of the range, bottom of the range, several false breakdowns. Eventually, we had a breakout test. Accumulated my position here with an average of 85, and I've been holding ever since. Um, I sold covered calls on it because uh, I think like this is when the seasonality started, and I was like, okay, let me hedge in case we get a pullback and sell covered calls. And yeah, I ended up being kind of stuck with them, so I'm rolling it every week. Same thing, $1 per week. I want to hold Uber as long as possible. I think my valuation on Uber is in the database. I think it's like in the 90s or something like that. It's like still like fairly valued. Um, Amazon, you know, not much explanation needed. It is Amazon. It's been holding nicely. 200 SMA is right below 150 SMA, very strong support levels. I think if if you have a bigger account and you have collateral for Amazon and you wanted to trade something more safe, I think this would be a great one to look at. Amazon's a very strong company. It's the weakest of the Max 7 this year. Um, but it's still like it's my valuation of Amazon is 210, which is why I'm selling strikes at 210. But if you want it to be more aggressive, you can sell at the 200-day moving average at 215. You can get pretty good premium for that. So that's what I'm looking at too. Forecast for next week. Yeah, my forecast for next week is I think the market's going to keep grinding higher. There's no news. There's no earnings. Market has been strong, so I expect it to continue staying strong. Just keep an eye on AVWAP Q. That level has to keep holding. If we break below it, it just might signal like more bearishness to come, maybe a pullback coming, 5 to 10%. Was thinking about APLD CSP with earnings. So APLD. So right away, earnings is Thursday. Okay. It's above AVWAP E. That's bullish. Long term is in a bullish uptrend. 50 above the 150, both sloping up. Bullish trend cycle. These are all good things. But again, like we talked about earlier, you can take all your technicals and throw them out the window with earnings, right? Doesn't matter. So yes, it's bullish. The way I would trade earnings for as a good idea, personally, is I would look at the earnings analyzer. So I'll go on E-Trade on my phone really quick, just to give you an idea of what strike I would pick. You guys have good questions, so I'm cool to stick a little bit longer than 11 if you guys are down. So just FYI. So APLD. And by the way, I have no idea about the fundamentals, right? This is going to be a purely technical trade. I have no idea how their financials look. I'm not going to spend the time right now to do it. But if I go to their earnings analyzer, I'm seeing that the average actual move historically is about 13.3% on this name. The largest drawdown is 35%. And that 35% was in April 14th, 2025. Is that right? This one right here? Yeah, right here. Okay. So, based off that, I for sure want my strike to be 15% below minimum, right? That's just based off the average implied move. Let's just assume this price point as the anchor, so 15%. So at least 2250, right? If I wanted to be more conservative, let me check the premiums for that. At 2250, you'll get, damn, you'll get 75 cents per contract. That's really good. Yeah, I see why you're looking at this now. Okay. Um, yeah, that's really good. So because the premiums are high with earnings, you can go if you wanted to be more conservative, right? Because you will have a chance of being assigned here based off historical averages. If you want to be more safe, you can maybe go down to the 20-day moving average at 21. You'll still get 43 cents per contract, which is still really good. I'm curious. I really like $17. I know it's very safe, but like it looks like it's a confluence between the swing high here and the 50 moving average and a VWAP-E from the previous earnings. So maybe 17.50. Yeah, not worth it. You only get 10 cents. Okay. So it's too safe. Too safe. I'm seeing you can get $29, 29 cents for the 20 put. So $29 divided by 2 grand collateral. That's still a 1.5% return on something very safe. So 20 is cool too. I mean, so I guess after looking at this, below 15% for sure. I think the strike I would like is this recent low here, confluence of the 20 SMA, which is also going to be below 15%, 21% drop to get assigned. You get good premium. You're pretty safe. You're playing the odds. Your only risk is a big fat drop like we saw here, but there's always a risk, right? It's just up to you. But a drop like that would put it down to the 50 SMA at 17. So I guess I mean, because it's such a low price, I would probably sell puts here at 21. And then if it drops, you get a sign, average down, buy some at 17. Um, and how aggressive you are, how many contracts do you take on, I say should be determined by fundamentals. So if you want, I'll do a fundamental analysis this weekend. I'll post it in market discussion for you guys. If it has good fundamentals, yeah, sure, let's go aggressive on it. It'll be fun. All right. No problem, SBAC. Regarding more about CCs, how do you determine strike? I've been doing okay in determining support levels of my CSPs. When I get signed, I've been missing out on some gains. Yep. In a way, cover calls is harder, right? In a way, because like market can just keep going up. It's like it goes back to that thing. It's like timing market tops is like impossible. It's so hard because the market just keeps moving higher, like historically. So CCs have that inherent problem too. I'm currently doing a CCs based purely off delta and aiming for a 2 to 4% return on capital. Fantastic. That's a good way of doing it. I've been considering doing more leaps around the same time I open the CSP or even CC to capture more upside. Yep. Very cool. I've tried leverage ETFs of the stock, but also get stopped out. Yes, leverage ETFs. I personally like to avoid anything leveraged like that. It just exaggerates movements and makes it harder to manage the trade. It makes it harder to hold too. I believe someone did like I'm sure you can find YouTube videos on it, but like with leverage ETFs or leverage stocks, whatever, um, like every drawdown, it takes a large upside to like recover from. So if it went down 10% and went up 10%, it's not going to get back to that price before because of that leverage or something like that. So that's a consideration too. So for CCs, my strike, I'm still learning with that how to do it very efficiently. But as of right now, I just decided like if I'm not ready to get called away, I'm not going to sell calls on it. I broke that rule with Google. I did not want to get called away on Google. Why would I? I have shares at 172.50. It's like it was undervalued. It's a Max 7 stock. Why like I shouldn't have sold that covered call. You know, I'm probably going to get called away eventually, but I'm trying to I'm trying to squeeze out as much as possible from it. But Nvidia, I didn't break that rule. I have not sold covered calls on that for a long time, and I'm still holding it. Now that works because my trading method is very like investor based, right? I like getting assigned on stocks near their valuation with good fundamentals that I can hold and treat it like as if I'm buying a long-term investment, right? It's going to be different like for HIMS. Like HIMS is a good company, don't get me wrong. Is it as good as Nvidia and Google? No, it's not. So for HIMS, I decided I wanted, just like what you're doing, I'm aiming for a certain percent return on capital. So HIMS, I sold my calls. I don't forgot what delta. Um, but selling the call at a certain percent return I wanted, and if it hits it, knowing that I can keep rolling up. A cool thing that my friend actually, he sells covered calls a lot. He gave me a good like concept to kind of think about. He was like, don't think of rolling covered calls only as, getting more premium. Like think of it as you're getting more dollars per share, right? So like he told me like for your Google, you're at 225. If you're able to roll, let's say Google comes down, hopefully, a little bit, um, maybe to like 235. He's like, you're able to roll that out, maybe a month. You can roll it up to 230. You'll get a net credit of like $1, but you raised it by 5. So really your net credit is $600. You should use that to determine your percent return too on capital. I don't know if you're already doing that, but I was missing that kind of concept in my head. Oh, so yep, yeah, yep. Exactly. That's what makes it so hard. I guess there is one indicator uh, I like for these kind of situations a little bit. Right? It's not the best, but it's not bad either. It's called pivot points. Um, standard pivot points. This is the only indicator that I've seen that does have good reactions to it that projects resistance levels to it. It's like, let me turn off this stuff here. So on Google, that didn't help. Okay, so on Google, like, you know, actually, let me pick a stock that's already at all-time highs, doesn't have a resistance level like this. Maybe, nice. There you go. Good one. Yep. So, according to Pivot Point Standard, the first resistance level is at 159.31. The second one's at 175.45. That's one way that you could use to kind of help you determine potential strikes for covered calls. And you can play around with it. Again, it's free on TradingView. It's not bad. I'll say it's not a bad indicator. Like it does react at these pivot point levels. Like over here, Hood stayed between R1 and P for the whole month, and these lines refresh every month. So this is August, and it stayed between these two levels here. The next month in September, it broke above P and R1. It kind of traded around it and went all the way up to R2. So I guess that's one way that could help you with your covered calls. Yep. Long calls over leverage, 100%. Leaps are good. Um, I will say leaps, the way I've learned to do them is at least a zero point 0.7 delta because that minimizes time decay very well. The higher your delta, the lower time decay you're going to experience on it. And if you're treating it like an investment, you want the least amount of time decay. Someone in our community did do a kind of a cool setup where they like did a call debit spread leap. So they bought around a zero point 0.5 delta call, sold a zero point 0.2 delta call, which is a correct way to structure your call debit spread. And then I think that came out to like $1. I forgot how much it was. I think it was like $1, $1,000 to pay for that. Then he sold the same expiration put at 50, and that gave him like $950 premium. So his net cost for that leap was like $50. And when I looked at it, I was like, to me, the only drawback I see is like obviously if the stock continues moving lower, you have to hold it. But if you're doing a leap, you're using an investor mindset already, right? So and that's what I'm assuming. I buy a leap when I think this price is going to be up in like a year because of good fundamentals or whatever. So if you have that, you're not even worried about if stock goes lower because you're pretty sure that after a year or two, it's going to be higher. The only drawback is you have to hold that collateral for that put the whole time. That's it. But if you don't want to do that and hold that collateral, you can just buy the deep in the money leap. For sure, better than leverage, in my opinion. Leverage, I only like for shorting. If you wanted to hedge using a short instead of buying SPY puts, you can just buy SQQQ. You don't have to worry about expiration. Leverage ETFs move quick when it drops, so you can get a nice return there. And for a low cost, they're like $20 a share. Really easy to build a hedge position for your portfolio. So I have a covered call, 130, 1219 on hood. Cost basis 105. Nice. Was thinking of rolling it to 2028. Ooh. Would you roll to get reimbursed for the cost of rolling for closest date or how long before? Interesting question. So hood, you have a covered call at 130. Oh, I see. It's at 148. Okay. Kind of like my Google position. 1219. Yeah, it's already far out. Okay, so the way I'm doing my covered calls now is I would leave it alone. Okay, if I was in your position, I would leave the strike alone because your expiration is so far out. The chances of you getting called away before expiration is pretty low until like December comes around. Within that time, hood can drop. And when hood drops, premiums will go up. You could roll it a little bit easier. I know hood is strong and the market is going to be strong November and stuff like that, but it could still like do mini dips, like this is a mini dip, 10%. Damn. Okay. I'm looking maybe smaller drops, like if we're in a strong uptrend like in July. Maybe something like this. 10%. Wow, okay. Okay, that's good. So if you get a 10% drop on hood, you know, let's just say it keeps going up, we don't get a drop in October or whatever, we'll use pivot points here since we brought it up. Let's say it gets up to 175, right? R2. And then at 175, it drops 10%. Nah, yeah. Because then I was thinking if it drops, your premiums will go up, you can roll it a little bit better. Maybe like to 140. 140, and then you can get a net credit for that. And then when you get called away, you get more juice out of your shares, In this kind of situation, because hood just got added to the S&P 500, it's going to be really strong because a lot of institutions are going to be allocating it into their index. So you're going to get a lot of bidding on it, a lot of bid. So I hate to be like bad news guy, but I think the chance of getting called away, unfortunately, is higher here. It's kind of like my Google position, but the way I've been handling Google is I just sell weekly same strike calls until I see a pullback, and when I do, then I'll roll up and out. And I'll just keep doing that until I just kind of give up and just say, okay, I can take the shares away, get the capital back, and maybe roll it again. Maybe the market will pull back eventually, right? So it's going to keep going up, and then one day it's going to pull back, and who's going to pull back with it? Maybe you can sell a put at that time, get reassigned, and continue again. I know it's tempting to want to hold on to it for a long time. Like if you think it's a good investment, maybe it might be a good idea to roll your covered call to 2028, or you can just close it for a loss. There's always an option too. Like hopefully as a trader, you have a bank of profitability, right? You can give up some of your profit for exchange of keeping your HUD shares, and just don't sell covered calls on it until you're ready for it to get called away. Um, I hope that helps. I don't get assigned that often, so covered calls is not like my strong suit, but I'm trying to learn more about it and experiencing it right now too. But that's kind of how I would look at it. Yeah, it's okay, man. It happens. Um, I'll give like maybe 5 minutes for more questions if you guys want. But these are good questions. I'm like, yeah, I enjoy talking about stocks, man. I wish I knew more people in my life personally that like stocks. Everyone just kind of rolls their eyes. So it's nice. I like doing these like Discord events. I'm looking forward to doing them every week, October 20th. So I guess as to give more time for people for questions, I'll just share with you guys. Yeah. So I'll share with you guys. So I do plan. I've been had this Discord has been free for like over a year, and I've been very transparent and sharing a lot of tools and resources and my trades and everything. And I did that because I understand that there's a lot of Discords out there, and I understand the reputation around them feels scammy. Like I get it. And so I said, well, I already make money from trading. I don't need the money now. I mean, it's not that I need the money. That's not why I'm charging. Of course, like it's more like I'm put a lot of time into it. And if I want to start doing like more consistent weekly live streams, I have a wife, like I I sacrifice my time with her to spend it to help people, and this knowledge makes you money. It's valuable knowledge. So I wanted to make it worthwhile for me, you know. That's ultimately why I'm charging. Um, and also with charging comes this is very interesting actually, I'm gonna vent a little bit or not rant a little bit, but like when it comes to business and marketing, I learned that like when something is free, people don't take it seriously. So for a long time, like I didn't feel like I was getting taken seriously because it's a free Discord, it must not be that good. Otherwise you charge for it. And then there's people selling like 150, like $100 a month Discord, and they don't post anything. It's like, or they post like one or a couple of trades here and there, like plus 500% or something, and then they have like a lot of people. And my friend was like, "Hey, dude, like, yeah, like people pay for Equinox Gym in like LA, like $300 a month, and you pay for it, and you walk in, it's the same shit. It's just another gym." So it's like, okay, so I wanted to build a good community base. I wanted people who are serious. I don't want. I've had bots come in here shilling and all that shit. I don't want that. So making it monetized prevents that. It builds a strong community base. It makes people more take it more seriously because when you're paying for education, you're going to be more consistent with it, and it helps me be more consistent and more available. Right? Every week we can talk and learn together. And I price them based off um, the way I priced it was like, okay, if you pay for it, you're gonna make money and pay for your subscription. So I made a cheaper amount for smaller accounts. I did a poll and I saw that like of people who voted, half had an account less than 10K, the other half had an account of 100K or more. So I said, okay, there's two bases here. There's it's different trading styles with those two. So I'm making a lower version. So $30 a month or 15 with that discount for you guys, whoever's in my Discord. And that gives you access to small trades I take like HIMS and like Uber and stuff like that, basically below 10K. And you get access to all the investing stuff. Um, and like HIMS, you sell one super safe HIMS put in a week, you make like $40. So you paid for like 2 months. It's like I feel like that's super fair. And then for people who want to like who are already good at trading but want to make it better or learn it for themselves, I have the higher tier, which the big thing is giving access to my indicator because I feel like that's been a big key in a lot of my trading decisions. And I feel like that will like feel like a good tool for you guys to have for your own trading. And same thing like with my bigger trades, like what I like Amazon, right? I sell a put on Amazon at 210, super safe. I got like a $50 per, that's 2 months of subscription off one trade, you know? I feel like it's super fair. It's it makes it valuable, right? People see that price, it's nothing to scoff at, like it's a good price. But I wanted to like say thank you to you guys for like giving me a chance as I was free. So I wanted to give a really nice big discount. And it's a grandfathered in discount. You guys will stay, you guys will have it as long as you stay subscribed. And I'm like just like looking forward to that, honestly. It'll be fun to have like a talk about this stuff every week and make some money. All right, one more quick question. Yeah, I have 200 Lulu with cost basis 203. Oh wait, sorry, hold on really quick. I skipped a couple comments, my bad. Thanks, appreciate you guys. I share the same sentiment. Yep, I think a part of it too keeps the community genuine and real. Yeah, 100%, man. 100%. Um, it's nice having people like you guys that like it just feels like good. Like it feels like I'm learning and like we're learning together and we can bounce ideas off each other. And I feel like there's an actual people like community of people here like who most importantly share the same idea of like how they want to build their trading and investing, which is cool. Just found our Discord not long ago. I understand why you're going to be charging. The hard part is some of the small account with limited funds. I understand. I understand. I really hope that that lower tier is affordable. I mean, it's like the same price as Netflix, right? $15 a month. And you will get access to the trades I take for small accounts. You'll get access to 2 live streams a month. So you'll have plenty of opportunity to to become profitable and get that money back for sure. Um, well, I mean, also just like because my Discord has been free, I mean, just my swing signals. I mean, my swing signals have been like the most comprehensive, easy to copy trades I've posted. Probably on After Hour even, like or anywhere. Like I literally tell you what contract I did, what time I'm gonna open it, what time I'm gonna close it, like everything, like And just in the 2 months I've had it live, the net profit was $1,500. And let's just say like someone didn't follow exactly me. I understand like when I take the trade, it takes like a minute to post it everywhere else too, so the price could be a little bit different. So I'll assume I'll take $500 off that. You made $1,000 in 2 months. That's 30 months of Market Victor Pro top tier at $40 a month. That's like 2 years paid off. So I feel like it's fair. Now I can get to your question. So one more quick question if you have time. I have 200 Lulu with cost basis 203. Let me open that up. Okay. Not bad. Not bad at all, dude. Been selling out the money calls and waiting. I do have a long call which has been doing good. Would you consider buying more to average down till it can get out? By the way, my first experience with Market Victory was a scammer. Fuck, dude, I'm sorry. Okay, I'm glad you found me too. Oh man. Yeah, I hate that, dude. I hate that. Hopefully we don't have that problem anymore soon. Um, uh, so Lulu, the thing with Lulu is that it's in a long-term downtrend, right? So I made this mistake on Novo. When it's in a long-term downtrend, you have to assume that the bottom could go lower. There could be a new bottom. I saw Novo and I was buying shares here and it was averaging up. I was like, okay, this is very constructive. Like, we broke this high, blah, blah, blah. Oh, this is the first time we broke the 100-day moving average since this downtrend started. I was like, wow, like, this is very bullish. And then it just drops 20% overnight and made a new bottom, a new low, I mean. So I learned my lesson there. I reduced my portfolio. I reduced my Novo investing position back down to 50%, and I'm leaving it there. I'm leaving it there until an uptrend forms. That's it, because I don't want to have too much funds caught up in there. So for Lulu, if I apply that same logic, I don't know how much 200 shares is for you, but if it's too large of a position, I would consider cutting down. It's like risk management. You don't want to have this in your chest, thinking about Lulu all the time. It takes away mental energy for you to focus on other trades and other positions that you have. So I'm a proponent of it's okay to take some loss and learn that lesson, because in the long run, because for me personally, I've missed out on good trades because I've been caught up on one position I've been stuck in or something in the past, and I would kick myself in the foot. So so first I would look at how big of a position is Lulu in your portfolio. All right. If it's not that bad, if it's like a small position, okay, cool. I wouldn't average down to it. I would only average down to make it a 50% position that you want. What I mean by that is, let's just say you want 500 shares of Lulu for your long term, whatever you want to do for it. So I wouldn't go more than 250 shares until I see a confirmation of a long term uptrend. And then I would keep selling your covered calls because it's working for you. It's bringing down your average too. Remember, covered call premium will bring down your cost basis. Even if it's 20 bucks a week, it doesn't matter. Like you're slowly bringing that cost basis down. So I think that's totally fine what you're doing. The long call is good. Keep it, keep it if you want it like an exit point. Good exit points typically are the previous bottoms. So perhaps 185 might be a good target to hit for that if you didn't want to hold that for a long time. And I guess really quick, I'll also go over long-term like trend changes. Basically, it's simple. It's the 50-day and the 150 moving average. All right. When these are sloping down and crossed above each other, it signals a long-term downtrend. Vice versa for the uptrend, Like everything else is not perfect, right? But it's really good and it has a strong track record. So as long as that stays true, even if price breaks below it, and even if price crosses below it on the 50-day, as long as they both still sloping up until that condition changes, you assume a continuation of that trend, even through COVID, until you see the opposite. Finally, now we see the moving averages start sloping down too. Now we see that there's a possibility of lower lows happening, which it did, until the opposite. I'll continue. You can continue, but right now we're in that long-term downtrend. This is lagging, of course. Moving averages are more lagging. So if you wanted a less odds of success one, but also just as good technical, is you want to look at it as like wave patterns, right? Stocks move in waves, kind of like the Elliott wave theory, right? So a downtrend is simply lower lows and higher lows. I mean, and lower highs and lower lows, right? So what does a trend change mean? An uptrend is higher highs and higher lows. So how would that look like? If I just took that and put it here, it just means that we're starting to break above these. We break above, it tests it, and continues, breaks above this one. That is a trend change. So you want to wait for Lulu to break above this level. Even this level here too. You're probably going to see something like this if it's going to break out. Vice versa until the next level and all that. And then it'll trend reverse, and eventually these moving averages are going to cross up like that. Okay. I'm down for this. Hell yeah, dude. At the moment, I don't have the means to do it. However, in the future, no problem, man. I will have a free section, and I'm going to continue posting my weekly trade log. So hopefully you can use that to give you some ideas. I'm also going to give the market manual for free and my SPY daily analysis for free too. So hopefully just having those three will help you continue learning. What's weird though is it doesn't show access to a couple channels. Oh, really? That's weird. You have the Victor role, so hopefully you can now, but let me know if it doesn't work still. When Lulu dropped, I had a deep in the money 190 cover call and it got. Oh, dude, nice. Very good. That's a good feeling. I have a cheap, somewhat speculative stock. I have been selling CCs on and almost have 50% of the position free. Nice. I've had it for just over 1 month. Good job, man. Yeah, CCs are amazing. Again, like psychologically, your worst case scenario is what? Not making enough money or not making as much. It's a win-win. So you're gonna make money if you get called away or not. So it's a very, especially when your cost basis is good. Like if you got assigned like, man, Broadcom, what an amazing stock. Um, I only bought like a handful of shares like at 220, dude. I should have went so much more ham. I don't know why I didn't. But anyways, like if you got assigned Broadcom at like 225, and you're selling covered calls up here, it's like, yeah, it's like you don't have any worries really. Your worry is how much more money can I make? It's a nice worry to have. All right, wow, almost 11:30. Okay, I think I'm gonna end it here. But this was fun. Hope you guys enjoyed and learned something. Um, so yeah, I guess I'll end it with saying that the new it's gonna be a new Discord server, right? So I'm making a new one. And then in my current one here, I'm going to put the WAP link and I'm going to put the coupon code for that 50% off that you guys can use. That's how I'm going to do it. It's going to go live October 20th. Um, Spread the word if you really think this is a good uh, resource for you and you feel like it's worth it. I want to help as many people as possible who have the same mentality as us, you have a job, you want to make pa somewhat passive income, consistent income with trading, use the money that's sitting in your bank, make it work for you. And then if you want, you can take that foundation and build into your own trading system. If you feel like there are people who would benefit from that, anyone who joins my current free Discord before October 20th will get access to that coupon too. So please spread the word if you know anybody. Um, and yeah, thanks again for taking the time out of your morning to be here with me. Uh, Thank you. I'm glad you came too. I appreciate that. Once I have it for free, I'll just hold the shares and not care what happens with them. I got signed on it once. I made $2 from purchase. That's how I made $10 from the call. Now I'm selling covered calls and buying them back low. Awesome, dude. Awesome. Yeah, no problem. Thank you guys for joining. I'm gonna do another one next week, most likely. I'll post about it probably Monday or Tuesday if I have the time, which I probably will. I'm trying to get the momentum going, because I'm going to be doing these weekly in my new Discord. So I want to tell my wife, like, hey, Sunday mornings, I'm going to be busy, so don't plan anything for me. So yeah. All right, guys. Thanks again, and good luck with next week.